Okay, here we go. Okay, so intro, we have talked through. Yeah, so this is one idea of making a lot of money. So if you want the money like what is in my background, I know of only this technique. I think they have almost 4 or 5 seasons. They have explained how to make that amount of money or print it yourself. But I'm sure money heist is not what you are looking at. You are probably looking at slightly lesser risky ways of money. So we will be talking of slightly lesser risk compared to what these guys did. So let's get started. Let's get started with a song.
सखी सैया तो खूब ही कमात है महंगाई डायन खाए जात है
So I guess anyway, for those who don't follow Hindi that much, I have done a very bad translation of this, where the guy is saying that my lover earns a lot, but the inflation which eats it up, right? So that is a problem which we have, right? Our money is not a static cost thing, right? Uh, and in fact, I was just reviewing gold prices, for example. So in 2000, gold prices were around 4,400 rupees for 10 grams. Right now, it's around 50,000 rupees. So money is not a static concept. Money is a dynamic concept. And since inflation keeps beating down your money, unless you grow it, so what I'm trying to say is that not doing anything is not an option unless you want to become poorer day by day, because the value of your money will keep going down, and you might have the same money if you put your money into a safe in your home. That's a perfect way to become poorer day by day.
सखी सैया
Okay, so let's start with few mindset changes which are required for you to start investing, start saving money. So first mindset, which is, yeah, people say I don't have money, right? This is a very common thing I hear from people, and especially from people who are probably not the primary earners in their family. But the deal is that you can start your journeys with as small as, let's say, 100 rupees, 500 rupees. So it's not about not having money. The primary issue is that do you have the mindset and discipline to save money or not? And it is perfectly fine that somebody might be saving maybe few lakhs a month, somebody else might be saving few thousands, and that's fine, that's okay. But the whole idea is that somebody who's disciplined and at it every month can, end up gathering a huge corpus. So I don't have money is a very, very bad argument to give yourself, and or even waiting, right? When I'll have 10,000 extra, then only I'll start. That will never happen, right? This is like saying that I'll start eating healthy when number of calories in a food item will decrease or something else, right? Or some other correlation. So that is the first thing. I think I don't have money is a very bad argument to not start saving. Second thing is I don't have time. So the frankly, right now in the current status, you don't need much time. And in fact, in this session, we will be talking about ways in which you can pretty much automate your entire process. In fact, the goal of this is that by end of this, you should have a plan of action in mind that this is what I can do tomorrow and get started. Right. So I want to build you to build a portfolio at the end of this session. This has to be a actionable session. Right. And I don't have time is not a good enough argument. Right now, there are enough instruments you can buy using which you can automate entire thing. So it's not that every month or every day you have to put in time on this. I don't have knowledge. That's possible. That's true. Actually, in fact, what I have realized in my personal finance journey is one thing is obviously uh, first thing is that we don't teach this to our kids, right? None of us learn personal finance in our schooling. What we are taught is math, physics, chemistry, biology. All our parents, in fact, before this, I was having a session with kids and I was asking them that, what do your parents tell you? So parents finally, when we are growing up as kids, our parents tell us, um, beta study well. And the indirect way of saying study well is study so that you can earn money, right? Studies you are not doing for any other purpose, right? Means there can be more purpose if you talk philosophically. But the primary reason why your parents want you to study is that you study and you translate that to money. But nobody teaches you how to manage that money, right? So this is something which is missing in our education system. And I know there are tons of people who are trying to fill in that gap, and I'm also trying to do the same. And I'm trying to do the same, not because I was very knowledgeable, it was because I was very dumb. I've gone through that dumb process, and now I'm realizing that how that dumb process can impact me. So that's why this effort to learn it myself first, and then also explain to people. I don't want money is another reason why you can, think about. It's good that if you have a, but I think each one of us needs at least some bit of money. And as I was telling that, uh, your money will, even if let's say you have 100 rupees, that will become 50 rupees if you don't plan it well, right? So even if you don't want money, just to be at where you are, you will actually need some knowledge. The last one which you hear from, especially I think a lot of people of my generation or maybe one generation above that, they always thought of investment and all these things as gambling, right? In fact, I know my sister Aarti Didi is here, and she forwarded me something that somebody talked to his neighbor that I stay in a rented house, and they started investing, and now both of them stay in a rented house. There was some WhatsApp forward which was, I think, doing rounds, right? So a lot of people do perceive that investing, all these things are a gamble. But I think out here we are about to talk how to make it safe, how to make it a planned approach, and sort of understand what is the gap in our knowledge, which makes us feel that it is a gamble. So these are the fundamental mindset changes which I think a lot of people have. Uh, Guys, feel free to interrupt, and any questions, any comments, please feel free to mention them.
Bilal is Vijay here. Okay, go ahead.
Yeah.
No. What I was trying to say is, so I think you have pretty much spotted it out. I think the third point is my most major issue, and predominantly why that comes is also ever since I started working, like 15 years ago, my only goal was to pay my home EMI. Right, I thought that's the major asset that I'm going to do. So, and then every month on month till today, when I pay my EMI, I still think, oh, I'm just building it up for an asset. But then now I'm realizing that there is life beyond that, right? I think there has to go beyond it and beyond that ATC, what we claim in our offices. Because I also think that there's a lot of FOMO that's happening, right? Because everyone around me is trying to do something to save money or doing something that they are earning more. And then I feel, am I really doing something that is not supposed to be done, right? So that got me just to come here. And so, yeah, that's about it.
Yeah. So yeah, all I can say.
I have a small.
Yeah.
I
Go
mean,
ahead, Snigdha.
I'm just interrupting you. So,
Yeah. Sure.
so what I too agree is that the third point is, of course, evident in most of the people who are right now not doing anything with investment. But for me, I'll tell you my problem.
Mm-hmm.
I don't know if you could help or I have to help myself rather, is the inclination to be consistent in it. So even if somebody is teaching me or showing me, I'm not interested. Is it because um, it's not the kind of thing I have ever done before? Or is it that I find it tough to understand the whole concept and fear that I may not be able to? There are so many things that keeps actually going on in my mind and I've really not taken to it ever. But this time I've made up my mind I have to start it and I shall start like as at the earliest when you say, so be tomorrow. It's like that. But I really want to be consistent in it, and that's where I need the maximum help.
So Vijay, just to answer your question, been there, done that. I have done similar mistakes. I can totally relate to you. And Snigdha, to answer your question, uh, I think, yeah, that is a problem which, as I was telling, none of us are taught this way. In fact, sometimes we are taught wrong things as well, right? It's like
Yeah.
a parent will say, put in fixed deposit or something like that, right? So a lot of people, but right now what is possible is, in scenarios like you, it's a good idea to build a very simple approach to investing. Look, when we talk
Okay.
about personal finance, there is one important word, personal. It's not just about finance. Okay. So personal is that when, let's say, for example, if your personal finance advisor or whatever is working with you, he will understand what is your mindset, what will work best for you. What works best for you might be very different from what
Hmm.
works best for Vijay.
Right. Every person, I think, yeah, each two.
Yeah.
Yeah.
And every person, it's not just about financial status as well. It is also about your mindset. Is just to give you an example. Let's say there are two people who have a worth of, let's say, 1,000 rupees, right? Now, let's say you lose 1 rupee somehow. Okay. So now what can happen is, first thing is, one rupees out of 1,000 probably is a small, you can ignore it. But then two people can have a different mindset towards money. One guy might lose his sleep over losing 1 rupee. Another guy might not lose his sleep even if he loses 10 rupees, right? So all of us are made different, and it's good idea for us to understand that. Uh, Shashikala, I think you have a question. Can you please go ahead?
Yes, I do. So my problem is, of course, the third one, and I feel I'm too old to start now.
Oh, okay, okay. No, no, there's no nothing like that. Okay. So I'll tell you one of my inspirations. We used to have a landlady in Lucknow. I used to stay in Lucknow, and she probably was 60 plus or something. And I remember visiting her. Maybe unfortunately she passed away a few years back. And so I visited her home, and at that time I was zero on investing. When I went to her home, she told me so much about investing, stocks, and all that stuff. And I was amazed to see she's not somebody who has worked outside. She's not somebody who has seen much of the world. She was a homemaker, but she just picked this up and followed her interest, right? So I don't think there is an age associated with it, Shashi. But so yeah, it's never too late. I think this is something missing in our education, right? And I used to have a friend who used to tell that when we are kids, we take the education what parents give us, but when we grow up, we study topics which we love doing, right? So I remember history, reading history as a kid was always a bad feeling, but now I love to watch a lot of history related stuff and learn about Roman Empire or something else, right? So that happens, Shashi. So that shouldn't be a blocker for you. And we'll anyway talk about approach which doesn't require a complex setup for you, right?
That's reassuring.
And at the end of it, I want to make it actionable. So this should there should be key takeaways. It's not just theory, it should be practical as well. So yeah, so this is pretty much the story of all our life, right? 99% effort, advice you get, everything is on earning money. There's 1% or probably less than that on how to manage money. And this is true with all of us. There's no exception on this. What I have seen, at least in my family, is that people who are usually from business family backgrounds, they usually have better knowledge of this. But yeah, so even in my family, I have seen is that all the guys or girls who have a business family background, they understand this better than a lot of us. My father was in a government service, so those kind of people have relatively less knowledge about this. So let's talk a little bit about some broad tips before we get into some specific things. First thing is just understand asset and liabilities. The simple explanation is asset is something which puts money in your pocket. Liability is something which takes money out of your pocket. So Vijay, for example, let's say if you took a home, if you generate rent from that, then that is a asset for you. But if you are just paying the EMI, then that's a liability for you, right? So it's a good idea to just understand what is your asset. Your assets can be multiple, right? It might be a property which is generating some revenue for you. It might be stocks you buy. It might be mutual funds you buy. Liabilities might be typically loans and money you have taken from somebody else. So those kind of things, right? Understand liquidity is another interesting aspect. Liquidity is another thing which you should understand well. liquidity of different assets is different. So let's say we talk about, let's say you buy a house. Let's say your house is worth 50 lakhs, right? And suddenly you need 5 lakh rupees for some urgency, some family emergency, some medical emergency in the family. Now the problem is that you can't sell bathroom of your house and take that 5 lakh out, right? So, and it's tough to sell a house as well, right? I know friends in Bangalore who have struggled to, you have north facing, south facing, all those things, right? So sometimes you might have the asset, so you are worth 50 lakhs, but you are struggling to get that 1 lakh rupee out or 5 lakh rupee out of that, right? So it's a good idea to understand liquidity of whatever you own. Third point is the most important point. All of us are taught about how to earn an active income. Active income is something what we earn from what we are doing every day. You go to office, you are a software job, you are making that active income. We earn money by the activities which we are doing, but our money most of the cases is not doing anything, right? And that is one of the problem. You have to make your money work. If your money is not working, then the problem will be that you will always have a shortage of money, right? So here we will talk about how we can make your money work. Yeah, credit card usage is something which is again something which I think most of the grown-ups do. But yeah, credit card, defaulting on a credit card is one of the worst things you can do, right? So if either don't use credit cards, or if you use, make sure that you use them just as a payment instrument. Don't try to get into a mode where you are paying a credit card. If you can't control your purchase behavior, it's better not to have a credit card. But you think if you can control, then it is, you can own a credit card, but make sure that you don't default on them, because if you default on them, you get into a weird loop of first thing, your credit ratings will go down, you'll be paying maybe 20-30% interest rates on that. So all those things are which will make you poorer. Tax planning is again something which is almost like a 2-hour session in itself. But one good thing is that you should do tax planning in advance. Tax planning is, I don't know if you follow stats, what happens in India is Jan, Feb, March are the month when everybody does tax planning. And when you are doing it at the last moment, your probability of buying a bad instrument for tax planning are very high. So if you want to save tax via, I mean, legal means, then it's important that you think of tax planning as a continuous thing, not just as a March, Jan, Feb, March activity. Emergency fund is again something, and Snigdha, this is something which is important. I think emergency fund is something which is required, and this is what happens. I think Vijay, pointing out to both the points you guys were raising.
Yeah.
If you don't have an emergency fund, what happens is if you don't build that, you end up taking money out of the wrong assets. Let's say you have five places where you have money, and suddenly, let's say COVID came and your source of salary disappears. Now the question is, where do you make money? Where do you take money out of, right? So if you don't build emergency fund, in fact, this is very interesting. I was talking to, there's a company called Milap. I'm sure most of you would have heard about them, right? They have this. So I was talking to the founder of Milap. He was talking about a very interesting thing. He was saying one of the reason I started Milap was because I realized that medical emergencies are one of the biggest reasons why people go into extreme poverty. Okay, that somebody's family, somebody is not doing well, it needs probably few lakh operation, and now what they'll end up doing is they'll probably sell their land. But let's say if you have 5 assets, which one to sell, right? That is also a call you have to make at that point, right? Make goals. This is again a very important task. And when I say make goals, make these time-based goals, right? So, and these goals obviously evolve over time. Like for me at my age, I'm like roughly 48, and at my age, the goals are more like kids education. So goals are about, so when you are making goals, there are 2-3 things which you should keep in mind. You should have an amount in mind. So for example, for my daughter's education, I've asked her, where do you think you want to study? I've roughly estimated how much money is required. And then you understand in how much time that is required. Then there is third aspect of a goal which is required is that you need to make a list of whether it's a negotiable goal or a non-negotiable goal. So for example, let's say if I want to travel across Europe, right? So, and let's say I want to travel across Europe in 5 years. Now, this is a flexible goal, right? If let's say some emergency comes, if 5 years becomes 6 years, I can still live with it. But let's say another scenario, my kids want to get educated. This is a non-negotiable goal. I can't tell my daughter you can't study because I did bad planning of money, right? So make sure when you are making goals, you understand the duration, amount, and flexibility of the goal. So there can be short-term goals, there can be medium-term goals, there can be long-term goals. So long-term goal for most of us, I think at this age will be obviously retirement, right? 60, 70, what will I do when I retire, right? Make a savings plan. This is again an important thing. Make sure that you understand what money is coming in for you and how you will save. So we'll talk a little bit in detail about it as well. Get rid of debt. Bad quality of debt is one of the things which will always keep us poor. And when I say bad quality of debt, I typically mean debt which is very high interest rate. So credit card debt is bad. Uh, Most of these appliance purchase debts are pretty bad because they'll come at a higher interest rate. Housing debt is the only debt which is okay in most of the scenarios. Okay, but most of the other kind of debts are actually a bad idea because they are pretty much providing you a way to live beyond your means, and that in the longer run will cause problems for you. Track your net worth. That is another important thing. It's a good idea for you to keep a track of, and I'll maybe show you a small Excel where I can show you how to keep a track of your net worth. It's a good idea to just build a simple Excel where maybe once a month or once in 3 months, you sort of tabulate that. Yeah, this is because this just gives you a direction, right? Like in this financial year, did I make progress? Did I go down? It's a good idea to just review that to yourself. Okay, so this is one thing which is a fairly important thing to understand. So I think, Snigdha, you are a health coach. I think you will appreciate this even more. If let's say refined oil was called as chemically treated oil, I'm guessing none of us would have used it ever, right? Because chemically treated
Totally.
oil doesn't sound like anything which we want to use, right? So companies create interesting name for their products so
Yeah.
that they get adopted better by customers. It's exactly the same with uh, it's exactly the same with Zoom. It's tough to figure out from whom. So it's exactly the same in terms of savings account, right? Most of us are used to having a bank account, savings account, and we end up storing large amount of money in savings bank account. Typical returns you get in a savings bank account is right now 2.5%, at max 3%, right? And the inflation in the country is at around 5%, 6% in that range, right? So it's a perfect way to become poorer every day, right? So if you have kept a lot of money in a savings bank account and you assume that savings bank account is a great way to save money, wrong idea. It is going to make poorer every day. And we,
Can I ask a question?
yeah, sure. Go ahead, Sindha.
Give me. Okay. See, so I mean, when you were talking about savings account, I was just like smiling on my own because I've heard this so many times that FD is one of the worst ideas if you really want to make money because the rate of interest is never high. Okay. But however, right from your childhood, what I've always heard, oh, fixed deposit is a great, एक कोई तो भी plan किया है इसने types.
Right.
But the fear of having it done in SIPs or mutual fund and etc. is, I think, the fear. That's the whole thing. Yeah, कि भाई कहीं पैसे. So I've also heard कि थोड़े पैसे हमेशा थोड़ा म्यूचुअल और SIP में डालो और बाकी का मतलब क्या है? You must have FD. Is it a myth or a fact that you must have FD also?
Yeah, FD is a good look. So that's the whole idea. I think during the course, we'll understand how to structure your portfolio. And FD can be part of that portfolio.
अच्छा, okay. ठीक है.
So,
Thanks.
let's say if you have 100 rupees, how you will split it, we'll talk specifically about this problem. Okay. So keeping everything in one asset class is not a good idea. You can split it across asset classes. LIC is one of the biggest scam in the country, and everybody's family has enough LIC agents. I'm guessing if I ask you to raise hands, how many of you have LIC policy and you have no idea of what the returns are? I'm guessing everybody will raise. I'll raise my hands, maybe 4 or 5.
Yeah, I think all.
I'm happy to be an exception.
You are exception. Okay, I'm proud of you.
That's great actually. Yeah, मतलब you hardly meet anybody उसने की LIC का insurance नहीं लिया है.
Yeah, so when I say it's a scam, I'm obviously exaggerating a little bit. It's not a scam like it's not illegal or something. But what I'm trying to say is that you are sold financial products which you can't understand, right? And which probably you don't need, right? Let's say I am at 70-year-old, okay, and I have no dependents. Let's say I have my pension coming from somewhere. I have no dependents. My kids are independent. I don't need an insurance at that point, right? I'm done with that. Even if I die, there's nobody who I have to take care of, right? So, but what happens in a lot of these things is that you are sold wrong products. And a typical, I'll go through some examples, exact examples of LIC. Typical returns of a LIC policy are in 4 to 7% range. Okay, and that is lower than inflation. So LIC will make you poorer. Now you'll talk about that it provides you insurance as well. So now the deal is this: you can buy insurance and investment separately. There is no point in buying any financial product, which most of the LIC policies are, like the policies which have names like endowment or money back. These are the worst policies to buy, right? They will give you very less protection and they will give you very less return. So if you have
Bhagwan, and with that money back only, I was sold.
yeah. So, and I'll tell you how this is sold as well. So there is a concept called XIRR, which I'll explain here, which will help you in evaluating such policies very clearly. So this is a good example of, so the XIRR, just take it how XIRR is calculated, we'll come to that. But these are the typical returns of LIC policies. Okay, this is a chart no LIC agent will show you. Okay, what they will show you is you will get your premium back, you will get twice of your premium back, right? Those kind of things. And those kind of things don't make any sense, right? If I take 100 rupees from you today, and after 30 years, if I give you 200 rupees, it has no value. By that time, 200 rupees is worth nothing, right? So what you have to calculate is the actual return of these policies. So let's just talk about this. So we are talking about, and this can take you back by crores. This is not like a small amount you lose, right? So let's take example of this. These are the mutual funds where if you had invested in, let's say 1998 to 2017, right? If you had done a 5,000 rupees SIP, over 20 years, you would be sitting on, let's take the top example, you will be sitting on almost 2 crores rupees, right? Whereas a similar investment of, here you are investing 60,000, which is 5,000 per month, right? You would be sitting on 20 lakhs, 30 lakhs. So you understand the delta, right? The delta is 1.5, 2 crores, right? The delta is not small, and this delta keeps becoming bigger and bigger. And I still feel bad about it because I did exactly 1997 is when I did my first set of LIC policies without thinking much, right? So this is pretty much a real story. There's nothing, this is all back data. We have calculated this and come up with these numbers, right? So the actual loss is not like 2 lakhs, 5 lakhs, nothing like that. The actual loss is around probably 1.5 crores or 2 crores, right? So just wanted to highlight that this can have a significant impact on the money you make. Few more things which are a basic hygiene things you should always do is you should obviously always plan for yeah, all of us are can vanish at any point in our life. Life is unpredictable. Make sure that you share your passwords in a safe way, obviously, with somebody, with a loved one, with a friend or family. Do nominations in your accounts. Make sure that all your accounts, whatever you create, bank accounts, you have done nominations correctly. Buy some term insurance. Make sure, especially if you are dependents on you, make sure that you buy term insurance. I think I forgot to add your health insurance is another aspect. So those are basic hygiene things which you should do, especially if you have others dependent on you.
So I just think one. I'm sorry.
Yeah.
Are you hear me? Okay.
Yeah, I can hear you.
Yeah, no, no. What I'm trying to say is regarding these aspects, right? Especially what if you're gone? I think that is why the traditional investments and savings account is still more prevalent among people because at least someone can then take it up and go, right? Because at times I wonder when people say, like, let's take a very simple example. I have like 10,000 rupees in my Paytm wallet, for example. Now tomorrow I die, what happens to that money, right? No one knows in my family knows that I had 10,000 in my Paytm wallet, right? And then that, and again, even Paytm is now going to take a point to know whether is this person going to be active and then push it back to the account. So I think wallet is a very simple example, but I'm saying a lot of people would have put in a lot of things in these crypto wallets or plenty of things like that. So I think those things scare me as well when what if I'm not there, right? But of course, I don't want to keep sharing all my passwords right now. But then you know what I mean.
Yeah, I got you. So I think one thing is that uh, put your passwords or accounts, sort of your financial details in some shared Excel,
Mm-hmm.
share it with some, at least that's what I do. I share it with a friend, and
Okay.
then so at least somebody has access to them if I'm not around.
True. I get it. I get it. Yeah.
That kind of things, sometimes it's tough to share with family. So friends are you are usually more frank with them, and you can discuss things like what happens if I die, type of things with
Yeah.
friends more than family sometimes. So but the idea is, and then nominations are possible, although crypto wallets are a different beast altogether. But in
Okay.
most of the other places, nominations are possible, where if the
Yes.
person knows that and then look, in some of the cases there are actually very good rules. In fact, this is recently, unfortunately my father passed away last year, and I was able to use a website to find out some of the stocks he had bought which were
I see. Interesting.
unassigned. So there is a agency by the SEBI which where the stocks go, okay, if they are not able to track the owner, and there is a process by which you can get them back actually.
Interesting.
I
Nice.
still have to run
Nice.
through that process, but I
Mm-hmm.
recently did that research and I was able to search and find what all stocks my father owned. Okay.
That is informative. Thanks.
Yeah, so at least some of these assets are relatively better controlled. Crypto and all obviously are not that well controlled. Right. So how much, where to invest? I think that is one thing which we should sort of understand a broad framework, right? And this is more like a thumb rule that we should at least try to save 50% on our needs, whatever, let's say you are making 100 rupees after tax and other deduction, 50% should go on your needs, 30% on your wants. So needs are obviously your food, your grocery bill, your rent, those kind of things. 30% on your wants. Wants are typically, let's say you want to have dinner at a costly place, or you want to go for go to Goa for a weekend holiday or that kind of things. So at least 20% is a thumb rule you should follow, that at least that is the amount which I should save. And obviously the expectation is that as you grow in your career, this 20% can become a much larger number. So this is more of a thumb rule, but obviously this is something which you can adjust. But at least even in the want needs things change, at least make sure that 20% is the amount you keep for saving. So if you have 100 rupees, keep it in your mind, your salary is only 80 rupees, not 20 rupees. Count that out from your plans. Now let's talk about a diverse set of asset classes. And Snigdha, as we were talking, we'll talk about how to combine these asset classes. We have talked about real estate as an asset class, which is illiquid. Uh, then obviously there are stocks, mutual funds. Mutual funds again are broadly of two types, which are debt related and equity related. And then there are fixed deposits and digital gold. I don't count physical gold as an investment because physical gold has too many problems with it, right? There's a storage problem. If you buy jewelry, then there is so if you like wearing gold, all that stuff, that's fine, but don't count it as investment. But digital gold is a great way to invest if you want to take some position in gold. And even out of the different ways to buy digital gold, sovereign gold bond is a scheme by government, which is one of the best ways to buy gold. Uh, then there is these are new investment classes called REIT and InvIT. REIT is nothing but it's a mutual fund of real estate. It solves the problem. So what it does is that a lot of people pool in money and buy commercial real estate, and whatever is return is given by that real estate. That is something which basically comes to your pocket. So this is a new structure which has come up, and there are only 3 or 4 REITs in India right now, but I'm sure more will come. So this is a new investment class which has come up. Digital assets, Bitcoin, Ethereum. I think 1 year back, I had to explain to people why you should not invest in them. I think currently they have gone down so significantly that most of the people are clear. So in my opinion, digital things like Bitcoin and digital currency, all these things, even if you want to invest, keep it in 1%, 2%, not more than that in your portfolio, right? Even if you want to invest in them. Uh, then the last point is it's good idea to understand weak correlation between asset classes. So let's take few examples. Okay, let's say you buy stocks and you buy let's say a Bitcoin. Okay, and let's say if there is a strong correlation between the two, whenever stocks go up, Bitcoin also goes up. Now the problem is that you will either go completely down or go completely up, right? So that is always a bad idea when you are building a portfolio. When you try to build a portfolio, you should build across asset classes which have a weak correlation. So for example, stocks and gold usually have a opposite correlation, right? So when stocks go up, gold goes down. When gold goes up, stock goes down. So in that case, if you allocate to both of them, stocks and gold, you are relatively more safe compared to investing in strongly correlated asset classes. And we'll come back with some examples on this as well. Another interesting way to invest is something called as a small case. This is something which is more I think a startup which started maybe a few years back. What they do is in a way it's similar to mutual fund but not mutual fund. They create a bouquet for you based on some thesis. So for example, there is an electric vehicle small case which in turn consists of all these companies. So let's say if you have a thesis that in 10 years electric vehicles companies will be very important and they will grow fast, right? And now the problem with you is that you don't know which are the companies which will benefit from the electric vehicle change in India, right? So if I look at this list, you probably might not have heard of Endurance and Motherson Sumi, right? But these are one of the best, or Sundaram Fasteners, right? But these are some of the best companies in terms of making auto accessories, right? Your cars are made like there are different parts, and a lot of these companies are more assemblers and marketing companies, right? What you buy it from Mahindra or buy it from Maruti doesn't mean that they manufacture everything. There is tons of other companies like Indian Oil Corporation, for example, is working a lot on EV charging, right? So what this kind of bouquet enables you to do is that you can buy into a theme, whatever theme you believe in, right? I've just given electric vehicle as an example, but any other theme you believe in. So small case is another mechanism of investing, which enables you to buy a bouquet of stocks, and it maintains the ratio between all of them. So it makes the job easier that if the guy who has designed the small case feels that Tata Elxsi is a company, by the way, Tata Elxsi makes a lot of software which is used inside automobile, right? So if you think that Tata Elxsi has to have a 20% weightage, that this is small case will make sure that you get that. So in some way it's a mutual fund, but slightly different from mutual funds because the stocks actually come to your demat account. I think this we talked about financial, what are your financial goals? Yeah, they can be something like this. I think negotiable, non-negotiable is one another thing you can add here. But yeah, these are the kind of financial goals which you can build. Now let's talk about, I think this is especially to the point, Snigdha, you were talking about. So what happens is that typically mutual funds or these instruments are of two types, right? One is basically equity stocks, something which we understand a lot. The other thing is debt or mutual fund debt, or you can call it bonds or fixed deposit. They're exactly the same thing, right? So the idea of equity is there is no guarantee on returns, but based on how the market does, your stock might double or might not double at all, or might become half of it. If you bought a Yes Bank stock, maybe you are at zero right now. Or maybe if you bought a Infosys stock, you might have multiplied manyfold. The idea of that is simple, that it's just like fixed deposit, right? You go and tell a bank, I am giving you 10,000 rupees for next 3 years, give me 6% returns, right? And these kind of debt instruments are run by everybody. It's not just that it is run by it is not just that it is run by just the banks. Government issues government actually collects a lot of loans. uh, so there are all kinds of things. There are businesses which collect a lot of loans. So one of the ideas, so what happens with debt and equity is a very volatile asset class. So typically what will happen with equity is, so let me maybe draw and show it as a diagram, right? So equity will go something like this. It will go up, go down, and it will go like this, right? So in this case, you can have a lot of heartaches whenever this is going down. When somebody is here, you'll feel what is happening here, right? You'll feel bad about it. So all that will happen. Debt will be relatively stable. It will probably not fluctuate much, and it will go in a more or less straight line. And although what can happen is that debt might give you lesser return compared to equity. So one of the formulas which you can follow is that you build a portfolio which has both equity and debt. Okay. And then what you do is as you age along, you keep, so when you are young, like before this, I was talking to 10-year-olds and 12-year-olds. There's no point in telling them to make debt investments. They can go 100% equity. Okay, but let's say you are at 40-year-old, then what you do is you just minus your age from 100. So 100 minus 40, that becomes your equity component. So when you are at 25-year-old, you are 75% equity. When you are at 60-year-old, your equity is down to 60. I am reaching for 50 soon. So I need probably a 50-50. So this is one sort of thumb rule or framework which you can use for figuring out how much do I put in equity, how much do I put in debt. Snigdha, does this make that point clear, Snigdha?
Yeah, yeah. Because even when I went for this recently, I mean, during the COVID time, everybody shook up and said, "Kuch to karo" type. So when I had gone to this Kotak Mahindra, so they had done this with, I had gone with Ankita. So obviously, her age, my age, they, suggested two different percentage. The reason being, of course, the age. So younger person can invest more because it's a longer period, and obviously, I did not take that risk, and so I think, yeah, I mean, when somebody is telling me to do it, I find it easier. The problem with me is I do not understand how to. Okay, this is like one investment, right? But when it comes in trading or these ये जो SIPs है या म्यूचुअल फंड है या किसका ये जो किसका शेयर लेना है कभी उतार रहा है, ये सब तो आई डोंट अंडरस्टैंड कि हमें करना चाहिए, किसी को देना चाहिए करने के लिए.
So just few things I'll just suggest you. One thing is, Snigdha, bank guys
हाँ.
are the wrong guys to talk to in terms of financial planning.
अच्छा,
Okay.
ओके.
Look, these bank relationship managers their targets and orientation is very different. Okay.
अच्छा,
Their
they
job is
need
to
some
sell.
clients, number of clients in a, कुछ
Exactly.
होगा
That's
उनका
sales.
अपना टारगेट.
Yeah, yeah.
ओके.
Yeah, yeah. So the job of a relationship manager of a bank is to massage your ego. He'll come and say happy morning, good morning, and then he'll
हाँ.
say your buy this. Finally, he'll end up selling a financial product on which he has commission. Okay.
वो तो है. हाँ, हाँ.
Right? Exactly the bad kind of guys to talk to. So that is the one thing. The second part is that you can automate this entire process, so you don't have to think many times what to do.
अच्छा, लाइक ये बोलते हैं ना कि सेलिंग बाइंग का कुछ रहता है टाइम. So how does one understand that?
Yeah.
So iPhone, I don't know whose iPhone, but you have raised your hand.
Yes, that's Mukund here.
Yeah.
One question.
Yeah.
Right, one question is that, see, this is basically when you look at the 60-40 classification. Does it also include, property and other things? Or let us say if the whole pie is 100, then how much should go into land and property? How much should go into equity? How much should go into debt? Is there some formula like that? Something that works today? And how much should go into gold? Let us say metals or gold.
Yeah. So we'll talk about it, but real estate as an investment is something.
Real estate, right?
Yeah, but real estate as an investment is something which I personally at this point don't find it very attractive, especially in large cities. So in real estate, if you have some insight into some special property or a special location where you have some extra knowledge which others don't have, right?
No, so ये जो 100 है अभी जैसे 60-40, this is purely liquid amount. That is what you're saying. So
yeah, this is liquid. Yeah, we are talking about liquid money here.
Okay. So I mean, let's say somebody has a real estate asset. Let them keep it on the side. Liquid amount you distribute it this way. That is your call whether you want to.
Okay. That's right.
All right. Okay. And in this 60-40, you have not mentioned how much should be gold.
Yes, we'll talk about it. We'll talk in more. Look, this is broad thumb rule.
Okay. So 40, that cash may be gold itself, right? Because that wherever your debt, you might include gold. Right?
Yeah. So, but we will build a portfolio in which there's a gold also.
Okay, good. I'll wait for it. No issues. Okay.
So there's another approach to build portfolio is a core and satellite approach, where what you do is you build a portfolio. So you will come across a lot of these, like for example, I talked about EV idea, right? But EV is an idea of the future. It's not the idea of the present, right? Maybe EV will take off in next 8 years and they might work. So another approach to build portfolio is that you build a core portfolio of companies which have a history of performance, right? So Infosys or a Hindustan Liver, these kind of things are basically things which are relatively more predictable. But none of these companies, Infosys cannot grow 10 times in next 2 years from here, right? It's already a multi-billion-dollar company, right? But maybe that can happen with another small company. So what you do is that you build a core and satellite portfolio. Okay, where your core portfolio consists of stable things. Your satellite portfolio is some themes which you believe in, which you think it's like you believe that pharma industry will do great, then you can invest in a pharma mutual fund. But you make sure that you understand this ratio. This is not like that you invest everything either in the core or everything in the satellite. That is another approach. Core and satellite is another approach to building portfolios. So now let's talk about this entire thing, how you can build a portfolio. And this is basically, again, these numbers are more, you can take them as guidance, not exactly as exact numbers. So here we have divided that we build a portfolio which is based off primarily 4 items: domestic equities, international equity. International mostly means US, because other countries you might not have a very good. China is a country which a lot of us don't believe in investing in, not because of any political or any other reasons, but China is a very closed country. You never know which company is getting closed tomorrow due to some other reason, right? India and US are relatively more stable democracies, and it's very tough to make a company or a founder vanish in India and US than it is in China, right? So domestic equity, international equity, debt, gold. So those are the four asset classes we are considering here. And based on how conservative you are or how aggressive you are, your percentages will change. And so usually when you work with a financial planner, he will try to understand your mindset, he will try to understand your financial situation and your objectives, and try to arrive at a ratio for this. And arriving at a good ratio for yourself for this is a very important task, because this is what defines the how your returns will grow, as well as it also defines how they will vary across time. So let's take an example. Okay. So this is something which is called as asset allocation, right? You are allocating percentages to every asset class, that how much money you will invest in it, right? So now what the entire goal of asset allocation is something like this, that can you achieve the same results by taking a lower risk, right? So the whole idea of this is not to increase your returns. The whole idea is, can I achieve the same returns with a lesser risk compared to higher risk? And one more thing you'll notice here is that a lot of these asset classes are weakly correlated. So let's take domestic equity and international equity. So this is a macroeconomics which happens in the world, right? So if let's say US investors feel that US market is not going to do well, what will they do is, all the big JP Morgans or whatever the big companies, what they'll do is they'll pull out their money and they will start buying emerging markets. So India is an emerging market, Brazil is an emerging market, right? So they will start investing here. A lot more people investing here. What will happen is prices will go up, right? So you can end up in a scenario where US is going down, India is going up. And it can happen vice versa also, right? Let's say if they US, they are getting decent returns, they'll pull out money out of India, invest in US, right? So gold is another class which goes sometimes in opposite directions to stock market. So and debt is more like a stable class which is not fluctuating a lot. So you can see the weak correlation between some of these asset classes. So if you combine all of them in a good proportion, you can reduce the risk which is there for you. So this is asset allocation, basically is primarily to reduce your risk. It is not to, you can bet all your rupees on, let's say, Infosys and or let's say some Sukh Sagar restaurant in Jayanagar 4th block, and assume it will become 100 times, right? But that is a very risky proposition to do. So the whole idea of building this kind of portfolio with percentages and with different asset classes is that you are trying to reduce your risk. So this is, I know it's very tough to read this one, but I'll just tell you the overall part of it. We talked about different types of investors, right? So what this does is it tells you that a guy who invested in, a balanced guy basically who invested, okay, he basically achieves the same results, but he actually achieves the same result with much less heartaches, right? His portfolio is not going up and down by a lot. So for example, if I look at, let me just draw it here and show it to you. So let's say if you look at this guy, right? So his returns in this year, which is 2008, his returns went down by 13%. This guy's returns went down by 33%. Now what will happen is, so this is the aggressive guy, this is a balanced guy. Now what will happen is the aggressive guy, he might, when it goes by 33%, he might just panic. He'll say, I'll withdraw from the market because, my 100 rupees has become now 67 rupees. I can't lose this money, right? But this balanced guy might still continue because he thinks, yeah, this is fine. 13 rupees I can afford to lose. So this graph basically tells you very clearly that if you do proper asset allocation, right? If you do the correct asset allocation, the volatility of your portfolio will become much less. And it happens in both direction, right? We talked about a down direction. The same thing is in the up direction also. Here you see his, he made 28%. This guy made 21%, right? And these are all back calculated data. So this is just based on different asset classes, whatever ratio I showed you. It is all this data is calculated based on that. Let me just delete these animations. Yeah, clear all drawings. Yeah. So another thing you need to understand is the power of compounding. As Einstein said, it's the eighth wonder, right? Power of compounding is something which is, so there is an easy way to calculate this. So all of us want to calculate how, in how many years will my money double, right? That is the easiest way for you to understand compounding, right? And I'll give you another example of compounding, but so the easier is there is a formula of 72. What you can do is, let's say a savings bank account, which typically gives you 3% interest rate, right? So 3% interest rate will give you just 3% interest rate will basically give you, if you are at 3% interest rate, so 72 by 3 equal to 24, your money will double in 24 years. If you do a typical fixed deposit, 6% returns, again 72 by 6 equal to 12, in 12 years, your money will double. If you do a mutual fund, which is roughly 15%, your money doubles in around 4.5 years. So you can understand between a savings bank account and between a mutual fund kind of scenario, the difference is almost 20 years, right? So that is what the difference can be in your money growth. And let's just understand compounding a little bit more. Let me just show you Excel and show you how this compounding thing works. Okay, so I've just made a simple Excel to show you compounding. Okay, let me clear up these funny images here. Right. So look, compounding is all about how you get interest on your interest, right? So let's say you start with 100 rupees and you are getting 10% results, right? So what happens is that you become 110, right? Next year you are starting with 110 rupees. Now what is happening is your interest is not 10 rupees, but it has become 11 rupees, right? So now your corpus after second year is 121 rupees, and this goes on like this. So what is happening here is, as you can clearly see, that as number of years increase, the interest you are making keeps increasing at a crazy pace. And if you look at this graph, we have just made the graph of this value. This graph becomes much more, much more, the value you are adding, if you take at this part of the graph, it is growing at a, so you are flat sort of here in this phase, but then it just takes on and it goes very high, right? So the incremental money you are making per year is actually something which becomes very high as you go along, right? So it is very important for you to understand how this compounding works, right? Compound interest is something which is taught to us as kids, but so compounding teaches you two important things. One thing is, if you are consistent at it, you can build significant wealth. The other part is that your wealth journey, I'm sure you would have heard of Warren Buffett, right? Warren Buffett, everybody has heard. His increase in wealth has mostly been after he turned 50 years. Okay. And that is because of exactly this impact, right? Because as you go down this path, the extra money you are getting here, like this is, I think, after 40 years, every year the extra money you are getting on your 100 rupee investment is actually 411 rupees, right? So it's important that you understand this compounding, that how it works, and make it work to your benefit. We'll look at some other calculators which will explain the compounding even better. But this is a great chart for you to understand that your money doubling can have a delta of almost 20 years if you are in the wrong instrument. Now let's talk briefly about tax planning. Yeah, the first thing is, it's fine to pay more, and don't get overwhelmed by the tax planning that I have to save tax at any cost. There's nothing like that. So a lot of people end up buying things just for tax saving and end up getting bad results. Like, so let's say if your 10 rupees becomes 11 rupees and you don't pay tax, versus 10 rupee becomes 15 rupees, and you pay 30% of the tax, that is better, right? So it is better to, it's nice to plan for your taxes, but don't get overwhelmed by that. I don't want to pay tax at any cost. The next part is that, yeah, do it throughout the year. Don't make it a Jan, Feb, March activity. And for tax saving, I think the best way to save taxes using ELSS. ELSS is a type of mutual funds which have a 3-year lock-in. This is the easiest way to invest, save taxes, and this gets covered under your whatever 80cc. And the only thing is it has a 3-year lock-in, but 3-year lock-in is good enough for I think most of the people uh, who are trying to save tax. If you want even more tax, then NPS is another scheme by government, which is a pretty good scheme, actually has a lot of tax advantages, where you can add another extra 50,000 from that. Any questions on this, or are we good?
I want to understand a little bit about the NPS, Birla.
Yeah, so NPS is something which basically is a scheme by government. The way it works is that so the idea of NPS is that government cannot afford to pay pensions to even their employees, right? Because
Yeah.
pensions are an extra cost. Let's say you stop working at 60, government has to pay you money for, and nowadays life expectancy is increasing, right?
Yeah.
Let's say life expectancy is at least 85, most of us. So for 25 years, they have to pay pensions to those people, right?
Yeah.
Now, what government has done is that part of your salary will go into collecting the pension amount for you. Okay. And this was done initially for government employees, but now it is launched for everybody.
So, which means this is only for salaried, if I am not mistaken, not people like me
No,
who are
everybody can use it. No, everybody can use it. This is not related to salary.
So that's what I wanted to understand.
Yeah, now it is
Can
open
I
for
avail of it? Karke? Okay.
Yeah, everybody can avail of this. So everybody is, so what you do is you basically pull in that money to NPS. And then what NPS does is that it basically has fund managers. So all the top HDFC, ICICI, LIC, all these companies manage your funds. And based on the way they manage your fund, your money will grow.
So they are doing the management.
Yeah, it's just like a mutual fund managed by the government. Yeah.
Okay. And you basically lock in your money for 3 years. And there is
NPS has a longer lock-in.
Acha, okay.
NPS is till 60 year your money is locked in.
Acha, वैसे मतलब it's like a pension kind of thing कि मतलब जमा कर दो, you will get it once you retire kind of thing, retirement planning type of.
Yeah, it's a retirement planning. And then other thing is that in NPS right now, as per the current rules, you can take out only 60% of your money, and with 40% of the money you have to buy something called as an annuity.
Okay, so no, when you're talking about taking out 60% is when? After 60? That's what you mean to say?
After age of 60.
Acha. And is this like this 50K? What does it denote? Is it the amount you need to put minimum, or ये क्या है? मुझे समझ में नहीं आया.
No, this is for tax planning. So you usually get you used to get an exemption till 1,50,000, right? You can get an additional 50,000 exemption using an NPS.
Acha, okay. Basically, the tax planning is what you're.
Yeah, this
so
is
how much do you have to put in NPS to get this 50,000 exemption?
No. So the deal is that up to 50,000, and you can invest any amount in NPS.
Any amount,
right? But 50,000 will be tax exempt. Okay.
Yeah. Remaining will be tax.
Okay, and what about this PPF भी होता है और एक tax saving FD भी होता है, right? What is all those?
हाँ, ये PPF में तो मैंने भी डाल रखा है. जो भी बैंक बोलता है कर देते हैं यार.
Yeah. So those are okay instruments, but not very good instruments right now.
But do they give you tax saving only on the interest, or is it on the amount you have invested also? PPF.
PPF might be tax exempt. I'm sure. I don't.
Okay, and tax saving FD is also there, right? Again, that's the same question. But at maximum you can do 150 plus 50, right? Whichever way you go, whatever you do.
150 plus 50. Yeah.
Okay, and for plus 50 if you do in NPS. Okay.
Yeah.
Okay. And then ये उसका भी होता है ना, health insurance policy का भी.
That is covered under that 150.
Oh, it's also everything is covered under 150.
Yeah,
okay. Let me check. Okay.
Yeah. ELSS
Okay.
is another thing which you can use. Basically,
Mm-hmm.
ELSS is just simple mutual funds which are locked in for 3 years,
Mm-hmm.
right? And 3 years is a reasonable. So
Yeah, but that will also be counted under that 150, is it?
150, yeah, it'll be counted.
Okay, fair to okay, I get it.
Actually, now what government is going towards a direction where all this tax planning is not making much sense.
Right, right.
Okay, because what is happening is, and especially if you are in 30% bracket,
Right.
right, there's a new regime where
Yeah,
you don't
I
have to
was
save
just going to
anything, you
ask.
just directly pay tax, right?
Yeah, I was just going to ask you about the old regime and new regime. I mean,
Right.
what really can we make sense of that?
So exact calculations need to be done for an individual, but overall, if you are in 30% bracket, in most of the cases, uh, new regime might not make much difference for you.
Yeah, it is not doesn't make
You
much
might as
difference.
well
They have
leave your
actually.
life and go to new regime.
But once you switch to new regime, you can't come back, right?
You can't come
That
back.
is also right. That is
You
once
want
if you yeah.
Yeah, they are simplifying taxes. They are trying to
Right, right.
simplify taxes, and which makes sense actually from government perspective. It makes sense.
Mm-hmm.
Our classmate Navneet Manohar will say at some point that he actually planned this out, right? We have a classmate who is an income tax commissioner, right? Okay, so tax planning, yeah, I think I can send you some separate videos which are focused on this. But NPS is a good thing, but yeah, not as the primary thing for you, but having some, and NPS again, look, there is also a concept of tax exemption at entry, tax exemption at redemption. So there is that classification of tax exemption. So NPS is good from that perspective, and the hope is, actually it hasn't been super successful for government. So the hope is that in this budget or next few budgets, they might actually bring something to make NPS more attractive.
And is there an entry age barrier to it?
I
How
think
late can we
they have
start
raised
on?
it now to 65. Earlier it was, I think, lesser than that, but now I think they have raised it recently. I can find that information and tell you. I'm forgetting the actual number. Recently, some rules have changed on this.
Okay. Wondering if it is worth at all to invest, start investing in NPS when you're in your 50s.
Actually, it might not be worth it. Look, NPS is useful for people who are bad at disciplining themselves. Okay. If you have the urge of taking money out, look, even with ELSS, you will take the money out. You can take the money out in NPS. What happens is your money gets logged. So there are some people who are bad at self-discipline. It works out decent for them. Otherwise, it's better to manage your money yourself and try to grow that. I'm assuming obviously this extra 50K is not important for you. Then you can, instead
No,
of,
it's not.
yeah. So if you're not trying to get tax exemption, then NPS you can skip as a.
BK, at what age can you start entry into this NPS?
I think NPS you can start it. I think below 60 anything should be fine. I can confirm on that. I don't.
And after 60 you can't?
After 60 probably they might not have. I can check that and get back to you on that.
Okay.
But ELSS is one of the best ways to save tax. If you have any tax thing, or if you are in 30% bracket, maybe just move to the look, income tax is always a problem compared to, right? Companies have a structure in which they have to pay less taxes, right? You pay tax on what you earn, right? Companies pay tax on what the profit they make. So if a company makes 100 rupees and spend 90, they will pay tax on 10 rupees. If your income is 100 rupees, you pay tax on 100 rupees. So the tax structure across the world is that taxation on individuals operates very differently from taxation on companies. Next issue is that retirement planning. This is again a very important thing. Look, understand that you have to spend 20, 25 years, 25, 30, and with increasing life expectancy, you have to spend 25, 30 years of your life when probably you are not earning. And I know at least in software and all, a lot of people want to retire early too, right? So there are people who will need that money, and And my assumption is that most of the parents now currently don't want to be dependent on their kids as well, right? Which was maybe common earlier, but nowadays most of the parents, everybody wants to, at least a lot of friends I talk to in my generation, everybody wants to be financially independent. In fact, they want to support their kids instead of being a burden on them, right? So yeah, starting early always helps. Understanding your requirements. It's a good idea to understand where your lifestyle is, how much money you need per month. Uh, then we are talking about a 3 bucket strategy. And let me explain that, because I think a lot of people who have joined are probably around my age group. So this will be a useful thing for everybody. So in retirement planning, what you do is you basically create 3 buckets. Okay. So the first bucket is basically a short-term bucket. Okay. And which is basically for immediate consumption. So your next 2-3 years expenses probably are in a bucket, which are in a bank account or maybe FDs or liquid funds. And we'll talk, these are funds which have more, they will give you less returns, but they will give you sort of, your money is more or less safe, right? So that is the first bucket you create. Second bucket, what you create is that you basically take a slightly longer duration mutual funds. Okay. And we'll talk a little bit about all the other kind of mutual funds. And the third bucket is where you can take more aggressive bet. So let's say you have a retirement corpus of 100 rupees. You can maybe divide it into these 3 buckets, and the ratios can be different for different people. But let's say we make it equal 33 rupees each. Then what happens is that as you keep going along, you try to pour some water from this bucket to this bucket to this bucket, right? So this bucket structure, what it does for you is that it creates that structure for you where part of your money is guaranteed for next 1.5 year. Second bucket is what is maybe 5-6 years range, and this is growing at a slightly higher pace. Then the third bucket is where you are taking more risk, and this probably is from a 10-12 year, right? So this will ensure that your money is growing in a structured way and you are not taking too much risk. So this kind of retirement structuring can be done by any financial planner. Sit down with you, understand your requirements, and create these buckets. And what are the individual, mutual funds or stocks you can buy that somebody can suggest for you. Now let's look at some of these calculators. These calculators are an interesting way for you to understand how much money you can make if you are consistent at it. So let me just give you a simple example. This example was given more to people who were 10-15-year-olds. So I'll just change some numbers here. So let's assume that you can invest 10,000 rupees. I think I missed 10. Okay. And let's say you can grow investment amount by 10% every year. Okay. This is not per month, every year. So you are investing 10,000 in the first year, then you make it 11,000 in the next year, and so on, right? And let's assume a conservative return of 12%. And most of us probably don't have 40 years ahead. Let's make it, let's say 20 years if you do this, right? So you can actually end up getting a corpus of almost 2 crores here, right? Where your investment is 68 lakhs, but whatever is the other amount is something which you are earning extra here, right? So what you can, and you can understand that if you increase these number of years, your returns we were at around 1.595 crores. Now this amount can actually grow insanely because of the compounding we talked about, right? Now this is 8.34 crores. So this is the advantage of starting early, even if it's a small amount, right? I see Dr. Mudit Jaju here, right? So yeah, so we have some young folks also here. I should not say that everybody out here is right. So a lot of people, I see Divya also here, who's much younger. So this is the power of starting early, that you can actually make significant amount of corpus just by the fact that that you are so you can use some of these calculators to calculate. So even if you are starting with 1,000 rupees, 1,000 rupees, that's not a problem, as long as important things for you are make growth, try to grow this as you grow in your careers, and then if you can afford many years, then that is something which is good for you. So now let us understand this concept of XIRR. I think this is an important thing to understand from perspective of returns. I was talking about LIC policies, right? So let me just show you Excel and explain you XIRR, how it works. So look, most of the LIC policies are something like this, right? On 1st Jan 2008, I pay, let's take 100 rupees. So for 10 years, I pay 100 rupees, right? Then my money back policy gives me, let's say 15 rupees. So 10 years, every 1st Jan, I paid 100 rupees. Okay. And then on 1st Jan 2018, let's say LIC pays me back 1500 rupees. Okay. So the agent will tell you that you get all your premium back, which is 1000 rupees. You have paid all together 1000 rupees, right? And then on top of that, you get a bonus of 500 rupees. So you got 1500 rupees. So finally, your returns are 50%. But this is a very wrong way to calculate the returns, right? This 100 rupees you invested on 1st Jan 2008 has pretty much no value in 2018 after 10 years, right? So the right way to calculate this is via using something called as XIRR formula. This is an easy formula available in Excel where you can give the dates, where you give, you put in the dates and you put in the amounts. And the way it does is that whatever goes out of your money, you put as minus, and whatever is the final value, you put that as plus. And what you'll realize is this is actually equivalent to 7.25% returns, right? So this is a calculation. It's a simple calculation. It's tough to do it by hand. Do it in Excel. It works well on Google Sheets as well as on your Microsoft Excel. And this is the best way for you to calculate returns of any financial instrument. Okay, so whenever a LIC agent comes to you and says that I'll return your premium or all that stuff like that, all that thing doesn't make any sense. When will you return my premium? Okay, if you are returning my premium 10 years later, it has already lost its value, right? So hope this concept of XIRR is clear to you. So whenever you want to calculate time adjusted return, then you use XIRR. You can't use, look, most of us are taught simple interest and compound interest in our schools, right? XIRR is not a topic which is taught to us, right? So that is the advantage which a lot of these financial products take to sell us the wrong product. So now let's talk about what products do I recommend. I recommend small case only if you are in an advanced stage of investment, not to everybody. Mutual funds is one thing which I strongly recommend to everybody. By default, I think this should be your go-to place for investing. Use ELSS if you want to do tax saving. Invest in both debt and equity funds. Digital gold, I talked about sovereign gold bond. Sovereign gold bond is the best way to invest in digital gold. This is a scheme by government. This is a scheme by government which keeps coming. I think they have at least 3-4 schemes which come up every year. They basically give you returns equivalent to the gold appreciation, as well as they give you 2.5, government gives you 2.5% extra from their side on sovereign gold bonds.
Bella, so when you talk about digital gold,
yeah,
is there again any particular locking period, or like what is it? Like how much is the minimum amount, or is there a locking period? Can anyone do it? What's that all about? I have really not heard about this much.
Okay.
The rest, of course, I've heard. So this is something I would like to know more, and I'm interested in.
Yeah, sure. So digital gold is of multiple types. Let me just explain all those multiple types. Look, physical gold is, I don't count that as investment. That's for your consumption. You love wearing gold, you buy it and you wear it. That's fine. You know, there's a lot of making charges, and so it's not like
all of that.
Yeah. So it's, so let's count that out. I'm not counting jewelry anybody owns. That is out of, that is not.
No, this typically digital gold is what is very intriguing. So yeah.
So one form of gold is that there are 2 or 3 gold companies in India. What they do is you can buy any amount. You can buy 100 rupees, 200 rupees. And what they do is on your behalf, they will buy gold and keep it in a safe locker.
Okay.
You can sell it at any point. So there is no amount limit.
There's no locking period. That's what
No
you're saying.
locking period, right? Yeah,
Acha.
there's no lock.
Okay.
So that is another
Okay.
way to invest.
Uh-huh.
And here what happens, the advantage for you is that you can buy in any amount, you can sell in any amount, right?
Okay.
And obviously that company who's keeping gold on your behalf will charge you something for that.
Correct.
Right? So that is another way to invest in gold. But then there is a scheme by, look, one of the problem of Indian economy is Indians own too much gold, right? I think I was reading some data that 15% of the world's gold is owned by Indian.
In India. I'm sure.
So I was debating something with my European colleagues, and India is not a poor country, right? With 15% of the world's gold. But the problem with that gold is that it is a non-productive asset, right? It is sitting in people's homes. It is not
doing nothing actually. Yeah.
Right? So what government came up with is a scheme called sovereign gold bond. So what they did is that you can buy this bond from government. They are sold at government price. So it is equivalent to, let's say, you buy 5 grams of gold, 10 grams of gold. Okay. And government give you the money based on how gold prices go up.
Okay.
So now you can sell this bond, let's say 5 years down the line, and government will give you that price based on whatever the gold price is at that point.
At that time. Okay.
And then even to make it more attractive, government gives you 2.5 extra interest on that.
Acha. Okay, for taking this scheme.
Yeah. But then there are few more constraints there, that this usually has a 8-year lock-in. Okay. But
actually, for the 2.5% is what you're saying.
Yeah. So there is a 8-year lock-in for these gold bonds. But then there is a workaround of that there is a secondary market of selling these bonds. So you can sell the bonds, but although not to government, but to other people.
Oh, okay.
It's just like a stock. It trades like stock in the market. Okay. So it is liquid as well as illiquid in a way, you can say. But this is one of the best ways to invest in gold.
Correct. Right.
2.5 extra is a fairly decent amount.
For that 8-year lock-in is what you're saying, right?
Yeah, 2.5% per year you are getting.
Oh,
okay. Fairly good deal. So this is the best way to invest in gold.
Yeah, and this opens up almost every other quarter, right?
Yeah, I think 3 or 4 times in a,
Oh, okay. No, I've really not heard of it. It's quite intriguing. I'll actually do more research on this and see what.
Yeah, and most of the banks also offer this for accounts.
Yeah, banks and post offices too, because I recently I came across this one.
So every bank does it? Every nationalized bank, or is it any bank?
I think I have seen it from ICICI and IDFC first.
No, I have seen it on SBI as well as Postal Department. So Postals is better. I think it's even faster. So SBI and Postal is where I know. So maybe ICICI does it too. I think in banks they charge you like at least I think a small percentage of money extra to process.
No, actually, Vijay, it's exactly I don't know what banks do. I invested this via ICICI Direct. I have a ICICI Direct account. And government actually has a scheme by which it gives you a 50 rupees discount per gram.
Nice.
If you do a digital payment.
Interesting.
I want to encourage all this digital payments and all.
Awesome.
Right.
It's good. Yeah. Thanks for sharing. This is quite an eye opener, at least for people like me who are like just know about a couple of investment schemes.
Yeah, bhai.
These are gilt funds, is it?
No, gilt funds are different. So gilt funds are basically funds. So gilt is short term for basically bonds which are issued by the government.
Achha, it has nothing to do with gold.
Nothing to do with gold. Okay. Gilt funds are very different.
One question, if we compare this with debt funds, then how better it would be?
You are trying to compare what? I'm sorry, debt funds to?
debt, I mean, the interest coming from the debt fund, because debt fund, I mean, could be more secure way. I mean, it's not going up and down that much, right? So, if we compare the interest coming from debt funds and over the time periods and this SGV, then how does, I mean, how better or worse it be?
These are two very different asset classes, Sayan. Okay, so gold is a different investment, debt fund is a different investment. And you should build that ratio for your portfolio, where you probably have both of them. Okay, so this is not exactly this versus that, maybe.
Okay, but in terms of return, I mean, both will be.
I'm sorry, Sayan. Yeah.
Sorry, I missed that.
Yeah, so what I was saying was that you actually
What did you say?
should keep both of them in your portfolio. They are not replacement for each other. These are two different investment options.
Okay, so we can keep both. I mean, that would be, I mean, more balanced.
Yeah. Then we'll talk about the ratios as well.
Okay, thank you.
So,
BK, what exactly was small case?
so a small case is basically a bouquet of, maybe let me just show you a small case website and show it to you what it does. So let's take, this is a small case website. So this is a recent thing which has come up. So like mutual funds in turn basically invest for you in multiple companies, right? But what happens with mutual funds is that stocks don't come into your demat account, right? Stocks are held by the mutual fund itself, right? Small case is a way for you to buy a bunch of stocks where the stocks will actually come into your, so for example, let's say, so these are tons of small cases which are there. Now, let's say there is a banking tracker. Okay. They have made a lot of them. Let me just go to a free one where I can show you the content of this. Okay. Just give me a sec. I think there's a way to filter free small cases. Yeah. Yeah, this is free access. Okay. So let's say you invest in electric mobility. So now I have no idea why this is. Okay, so what this consists of is that it basically has some stocks, which I showed you a list of stocks, right? So it will buy those stocks in that ratio here. Okay, so small case is another kind of mutual fund, but those stocks will actually end up in my, and these are stocks based on, so for example, rising rural demand. So let's say in India, we assume that India is right now a 60% rural economy, right? If you look at any developed nation, what happens is that rural population keeps diminishing over time, right? Less people are able to produce enough grains for rest of the country, right? Now, if you believe that in next 10 years, this rural population will have a lot of demand, so which are the companies which will benefit from it? So for example, I do know that this contains something called as Astral Pipes. Astral Pipe is a pipe making company which makes pipes for rural irrigation, right? Now that company will benefit from that. So what people do is they make a bouquet of these stocks, and you can buy all of them in one shot instead of trying to buy them separately and maintain their ratios. Does that explain small case?
Okay, thank you.
Do we still get to choose in small case, or we are buying the bouquet made for us?
Look, you can choose, you can edit a small case and change it, but the whole idea is that you don't do that. So you can do that, it gives you that flexibility. But if you do that, then the ratios will go for a toss and it won't be as per whatever your manager, your small case manager decided for you. Right?
And I can subscribe to any small case that I just saw there if I have the minimum amount to invest.
Yeah, you can subscribe to any small case, and all these small cases will have different minimum amounts themselves.
I noticed that.
Yeah.
So is it something similar to smaller cap mutual fund?
No, that small cap mutual fund is a very different thing.
Okay.
Okay, small cap mutual fund, basically what stock market is primarily divided into three types of companies. So one is top 100 companies. They are called as large cap companies. Okay, so these are all big companies. It will be HDFC Bank, it will be Reliance, Infosys, ICICI Bank, these kind of companies, right? Then the next 150 companies are called as mid-cap companies. Okay, mid-cap companies are basically mid-size companies. Then the next set of the remaining companies are basically called as small cap companies. For the next, I think 500 or maybe 250 are called as small cap companies. So that is the way. So small cap company means that they are investing in small cap companies as per the. So small case and small cap are totally different concepts.
But small case investment may have some large cap and medium cap and small cap things for me.
Yeah, that's right. So there are different types of mutual small cases, and some of them are based on if you go to a small case site, you can actually browse through, and here you can, I think it does give you a way to, it will tell you actually in detail. Once you log in, I think this is probably stopped work. Yeah, so it says equal. So this is against mid and small cap. So it's most of the uh, most of the stocks will be in mid and small cap here, for example, for this small case. So there are all kinds of small cases which are there. I think I'll need to log in to see this actual stocks.
Okay, so that means we have to check. I mean, we can check and see that what are things we have in the bouquet.
Yeah, the only thing is now they have most of the small cases have become paid small cases. So unless you pay, they won't let you see the content of them. Okay, that is the only problem. Now we have, earlier they had only free small cases. Still there are few free small cases, but a lot of them have become paid small cases now. Okay, but these are all research companies. There are stock research companies who run this. So for example, this is run by Windmill Capital. Okay, Windmill Capital itself has tons of different stocks, different small cases. So this in a way is like a mutual fund. The only difference is that the money lands up in the stocks land up in your demat account.
Okay.
Okay, let's just see what. Online apps are pretty good. I personally use online apps. Just one thing you make sure is if you are investing in mutual funds, always invest in direct mutual funds. So I think Snigdha, these are the kind of things which your bank might be doing wrongly for you. Most of these banks like Kotak or so there are two types of mutual funds. One is a regular mutual fund. One is a direct mutual fund. So what happens in direct regular mutual fund is that you end up paying commission to your broker. Okay.
Right.
It can be up to around 1%. Okay. And 1% makes a big difference in the longer run.
Correct.
Okay. So now there are a lot of these apps which are basically direct mutual fund apps.
Yeah, I just downloaded something called Zerodha, and I have absolutely no idea how to go about it.
Yeah, Zerodha has something called as Coin app. So Zerodha is one of them. I personally prefer to use. So I'll tell you the tools I use is I have an old ICICI Direct account because I started investing 20 years ago when ICICI Direct was the only guy. Then I have a Zerodha account using which I use a small case. And then I use Covera for my mutual fund investment. And Covera is a pretty good tool. I started using them because I used to advise them on SEO, but finally I found them one of the best tools available. But anyway, you can go with either one of them. That's not a problem. Like for my daughter, I use Zerodha.
Okay. I've just downloaded. I need to really, that's the reason I said, let me get into the session and do my own homework a bit so that, if there is some problem, I'll get in touch with you. I'm really in need of.
Sure. Let me know.
Thanks.
So I have a question.
Yeah, sure.
If you have a demat account,
Yeah.
and then does Covera offer any more advantage? Because like I have an HDFC demat account, and usme I can see all these small cases and other things. I can also do SIPs and mutual funds. But does Covera offer anything more than this?
No, Covera is only for mutual funds.
Okay.
HDFC will not have direct mutual funds. Means you can check with them.
All the asset management companies are represented. Like you can invest in Oswal, Motilal. I mean, all the listed.
No, that is fine. So each mutual fund has two schemes. One is
Right.
direct, one is regular.
Regular and direct. Both are available. Direct is also there.
Okay, I haven't checked on HDFC, never used it. But
okay.
What I have seen with other banks is that they don't offer you direct mutual funds, which are offered by some of these recent companies like Grow, Paytm Money, right? So in regular mutual funds, you end up losing at least 1% as a brokerage to them.
Okay. And Covera, how's it spelled? K-U-B-E-R or V-E-R?
K-U-V-E-R-A.
B-E-R-A, okay.
Even Zerodha actually has a direct mutual fund.
Okay, Zerodha, right? So either of Zerodha or Covera, right? Not necessary to have both.
Yeah, anyone is fine. Yeah.
Okay, fine.
Nowadays, actually in India, these systems are pretty good. So KYC and all gets done only once. Right. It's stored. So for you to set up any other app is very straightforward. Other thing to understand here very clearly is India actually is a very nicely regulated. Sometimes all of us living in India don't appreciate a lot of Indian things. But look, it's a very well-regulated market. Your money is totally safe. Your money is cannot be taken by any of the parties. Covera cannot take it. If tomorrow Covera closes down, then also your money is safe. Right. If tomorrow mutual fund closes down, then also your money is safe.
Wow. Okay.
So there are enough security things built in. Obviously, if the market goes down, your money will go down.
Right.
But a lot of these things are pretty well organized.
Cool. Awesome.
Yeah, but invest in direct mutual funds. Don't go to,
regular. Okay.
The regular, which is.
So what is the difference between, like, there is another option, direct and growth bhi bolte sometimes, they have the same mutual fund, but it's listed as regular, direct and growth, something.
Yeah. So there is a growth and then there is a dividend option.
Yes. Okay.
So the idea
dividend, they'll give you the dividend.
Yeah, and that you should not opt for. Always opt for
growth. Okay.
Right.
So direct and growth. That is the
direct and growth. And my assumption is that HDFC probably won't offer that.
Okay.
I might have to check exactly if they do, but I don't think I'll be surprised because most of the banks don't offer that. In fact, recently I used to operate with ICICI Direct. I actually exited everything from ICICI Direct and moved it to Covera exactly for.
But anyway, I might be mistaken. Let me check once again. Because I mean, usually that app is there on my phone only.
Okay.
Yeah. Okay.
So this is just a sample portfolio of what I invest in. I think these XIR returns, probably I made this PPT last year. Numbers might have changed over time. But just to give you some example of what I invest in. First two are more on pharma thing. This actually, I have stopped investing in them. I don't believe in the pharma story right now. So first two you can knock off right now. Then there is a global equity, so there is a PGIM Global Equity Opportunities Fund, which invests in tons of companies across the world. Actually, there are some European companies, there are some American companies. I know Shopify is there, which is a Canadian company. So a lot of very diverse companies in PGIM. I think Louis Vuitton is part of this fund. So it gives you a good access to a lot of large number of companies. Then there are, I think this slide is slightly older for me. Axis Small Cap is a pretty good fund. I actually invest in Axis Mid Cap also. As I explained, small cap, mid cap thing. Parag Parikh Flexi Cap is one of the best funds in town. Recommend it to everybody. And Parag Parikh Flexi Cap has around 25% exposure to US equity, which includes Google, Facebook, and these kind of companies. So it's one of the best funds in town. And in fact, I listen to the guy called Rajiv Thakkar, who is the investment head of this company. And I listen to his videos quite a lot, and I'm fairly impressed by his thought process. Then you have things like IDFC. This is the gilt fund ideals, government securities. This is the gilt fund. Quant tax growth is what I use as my ELSS fund. This is one of the best returns giving fund in the recent past. But this is a little risky fund in terms of quant is a very recent fund house which has come up, and actually it has done well in last 2-3 years. Then there is a large cap fund. Then I also use a Parag Parikh conservative hybrid. Conservative hybrid is a category of fund which has almost 65% debt and 20-25% equity, and around 10% they have as REIT and InvIT, real estate trust I talked about, right? So that exposure I wanted to get a little bit. So this is the way you sort of build a portfolio which is consists of different types of mutual funds. Just ignore the top two that I don't invest in anymore, right? But this is just some example of type of mutual funds and type of returns. And let me paraphrase it with that: last 2 years from COVID times, March 2020, returns have been obscenely high. You won't see these kind of results in future, but just to give you a sense of it. I invest in gold, sovereign gold bond, digital gold, no physical gold. These are the type of stocks I invest in. Some of them I have held for like maybe few decades, but there are all types of companies. Antony Waste is one of the largest handler of waste in our cities. Bank of Baroda, I think I sold. I have to update this. Some of PSU banks and public sector government companies don't excite me too much because government has too much interference on them, right? And government tries to take money out. So, for example, this LIC IPO is coming. I'm not planning to at least invest in it, because what happens with these government companies is government, whenever they want money, they use these companies to get money for themselves. So it's not a good idea to invest in companies who are at government's mercy. So Airtel is a pretty good company to invest in. CAMPS is an interesting company. You might have not have heard about it, but any mutual fund you buy that basically stays on a CAMPS platform. CAMPS is a software platform where all the mutual fund, they have almost 70% market share in India. Dabur is a pretty good Indian FMCG company. ICICI Bank is good. Infosys obviously is one of the best investments. You can, stable company. L&T is another. Larsen Turbo is a good company to invest in, infrastructure. You might have seen L&T everywhere, right? Wherever there's infrastructure construction. Maruti is something I have exited actually now. Maruti I somehow don't believe in, because Maruti has not given very clear signals on what their electric vehicle strategy is. So recently I moved from Maruti to Tata Motors exactly for that purpose. Reliance Industries is obviously one of the safest stocks in India, good stocks in India. But I won't recommend everybody to go into individual stocks. This is what I do. It's a good idea to keep your portfolio to 15, 10, 15, not more than that. I have slightly more number of stocks. In fact, I have to reduce this. But yeah, it's a good idea not to have more than 10, 15 stocks, because it's very tough to trace a lot of these stocks, right? So none of them is a investment advice, but I'm just trying to share sort of a sample portfolio type of thing. Small cases have given decent results. I think these numbers probably are relatively more updated, but yeah, last 1.5 year is a bad way to judge it, but most of these small cases have given me reasonable results. But these are outstanding results. These are pretty good results actually. Anything above 15% actually is a pretty good result. Debt portfolio, again, you have to think through. So debt again is of multiple type, right? So these are the things which I use. One is a government security fund, but then I use 3 funds, and these 3 funds are from a different duration. So one fund is ICICI short term, right? This is from a short term perspective, 1 or 2 year perspective. There is a ABSL Aditya Birla corporate bond fund, which is more from a 3 year perspective, and this Parag Parikh conservative hybrid fund is more from a slightly longer term perspective. And then Covera actually has a tool called Covera Save Smart, which invests in liquid funds. Let me just go through a little bit of type of mutual funds with you guys, because it's good to understand what are the different kind of mutual funds. Let me just show you maybe ET Money website. Just show to you what are the different kinds of mutual funds which are there. So look, these are the different kinds of mutual funds. There are, I think, 36 categories of mutual funds. Okay, but not everything is relevant to you, so you can consider only few. So these are equity funds, which are based on large cap, mid cap, small cap. Then there are ELSS funds. There are sectoral funds like sector of technology. Then even in debt funds, you have a lot of varieties of funds, right? Typically, what I end up using is liquid fund. So liquid fund is a substitute for your savings bank. So instead of putting your money in savings bank, shift everything to a liquid fund. These are more or less safe bets for you. Then corporate bond or banking PSU, these are good funds if you are looking at a 2-3 year horizon. And if you are slightly looking at longer term funds, what I end up using is more of hybrid funds, which are conservative hybrid is the category. So these are the funds which at least I end up using for long-term debt. And NPS is again a long-term debt because NPS is something which is anyway logged in for a long duration, right? So these are the typical funds which I end up using while building my portfolio.
बच्चा का चाह रहे हैं।
Huh? Okay. Yeah, I think I've already mentioned this. So this is the overall way to structure your portfolios, right? So equity, you can have stocks and mutual funds. My suggestion again is don't go into individual stocks, go only in mutual funds. Mutual funds, again, you can have active and passive mutual funds. Active mutual funds is where the fund manager is actively managing it. Passive managed funds are basically index funds, which basically take an index and follow it. Then you can have gold as another leg in your investment, debt as another leg in your investment. In debt, again, you can split it into liquid, banking, PSU, corporate bond. These are different kinds of mutual funds. So this is overall architecture. Now let's look at maybe precise example. So this is what I recommend to a busy, lazy, low risk taker. Okay, so if you are one of those guys who is busy with something else, don't want to invest much time in understanding this or doing this, this is a simple setup. If you have 100 rupees, put 25 in Parag Parikh Flexi Cap. This gives you exposure to good Indian equities, plus it gives you access to US equity as well. Put 25 rupees in Quant Tax Saver, or you can also do, if you are not doing tax saving via this, you can use index fund. Put 25 rupees in Axis Corporate Debt Fund or ICICI Prudential PSU Debt Funds. 10 rupees in liquid debt funds, liquid and debt funds. This is a suggested. Quant is a good liquid fund. Do maybe rupees 10 in FD. I think I've written 6.5% in Paytm. That tells you this is slightly old presentation. Now these numbers have come to 5.5%. And maybe put 5 rupees in gold, preferably via SGB. So this is a simple portfolio you can build. How exposure to.
Sorry, one question: how to invest in this Quant Tax Saver? Can we do it through the Demat account?
No, this is a mutual fund, so you can just buy it like any other mutual fund.
Okay, it's a mutual fund which Quant Tax Saver. Okay.
Yeah. Okay. So this is a simple portfolio you can build, and you can obviously change ratios on. So look, this is a 50-50 ratio portfolio, right?
Right.
Based on your understanding, your inclinations, you can change these ratios.
And you're saying instead of the Quant Tax Saver, we can do any index fund, Nifty 50.
Yeah. So if you are not using it for tax saving, let's say you don't want to do tax saving, your tax saving is covered by your home loan or something else, or insurance, right? So then you don't need to buy tax saver, right? You can, and this is a lazy, I'm talking about a very lazy approach. Look, I personally have more funds because I'm actively involved in this. I'm talking to people, I'm reading up on this, watching YouTube videos, all that stuff. So my assumption is most of you are not going to spend that much time. I'm watching videos of the investment officers of these guys. So all that is more involved process, right?
Okay.
So this is the perfect recipe for busy, lazy people.
Right, but we can move around depending on
Yeah.
our involvement. Yeah.
All of
So
these
you're
are
saying like
all of these are totally liquid for you, except ELSS. Everything is totally liquid for you. So at any point, if your mind changes, look, this is the advantage of being in mutual funds instead of real estate type of thing, right?
Right.
Real estate,
Lot
you
of
can-
mobility is there.
yeah,
Is this contact saver? Is it a ELSS?
yeah, it is a ELSS. Yeah.
Okay. And is it Nifty based or is it has a different this
No,
thing
no.
structure?
Tax saver is an active fund. It's not a passive fund.
Okay. Okay.
Okay. Tax saver is an active fund.
Okay.
Okay. Index fund is different. And index, personally, I'm using Navi index funds. Navi is a new kid on the block by Sachin Bansal, right? Flipkart guy.
Navi. Okay, but
Navi.
index funds usually are benchmarked to the index. So what difference will it make from one index fund to another, right? I mean,
No,
because then
but index funds with lower expense ratio will give you better returns. So Navi right now has the least expense ratio.
which one? What is it called?
Navi, Navi.
Navi. Okay. Okay.
So like, for example, for my daughter, I wanted to get her started. I just did a simple thing for her. Monthly, I'll put some amount in Parag Parik Flexi Cap and in Navi Index Fund, Nifty 50 Index Fund. Simple portfolio, nothing much to bother about. You don't have to think much.
So Navi is again, we have to download a separate app or it's just another mutual, like you can...
No, this will be available through your any of this mutual fund.
Investment channel, okay.
Yeah. Okay. So this is the best, easy portfolio. Obviously, I can work with the individual and figure out your requirements and fine tune it based on your requirement. But I thought if somebody is participating in a workshop, they should have some takeaway, right? Where they can understand that. So I think coming back to the same point, it's very straightforward to do this and you can automate the entire process, right? You can set up SIP, which can directly take this money, deposit into your account. Everything is automated. You have no attention to be paid. Maybe once a year you get it reviewed or once in 3 months you review it. Okay. So you can always set it up like that.
Wow.
Okay.
So you're very strong or bullish on Parag Parik Flexi Cap.
Yeah, Parag Parik is a very good fund house.
Okay.
In the sense that actually Parag Parik, you should search on YouTube. This guy was actually, Parag Parik was very, behavioral economics was one of his area of expertise. Fortunately, this guy died in 2015. But his son has continued this mutual fund.
Okay.
And, but there are other good flexi caps also. Look, the best option is that you go to, let's say, a site like ET Money. And what you do here is, so there are a lot of these rating agencies, right? So one thing is you figure out which are the fund types which are probably relevant to you. So multi-cap is one fund type which is relevant to you. Here you sort by ET Money rank. So all these top 3-4 funds are good funds. So if you look at multi-cap category, Parag Parik, Quant, PGIM India, these are all good funds. UTI. So this is one standard way to figure out which are, and not necessarily that you have to take the top guy here, because the top guy might not be the top guy next year.
Right.
Okay. But this gives
so
you
you're going to ET Money and then searching in mutual fund by putting Flexi Cap.
Yeah. So these are different categories of mutual fund.
Right. I got that. तो उसमें जाके ET Money में search करेंगे Flexi Cap पर.
Yeah. Okay. So let's say if you want to take short duration fund for 1 to 3 years, rank it. So these funds are Nippon India, Axis Short Term, ICICI Prudential. So this is one easy way to figure out what are the right mutual funds.
Right.
And these guys have created a complex score based on different things. It's not in mutual funds. It is about returns. It's about consistency. It's also about downside protection. So there are a lot of ratios, financial ratios defined for every mutual fund, which is like growth, standard deviation, how much does it fall when the market falls. Okay. So there are tons of other parameters based on which these things get defined.
Okay.
It's called as a Sharpe ratio. There are a lot of buzzwords associated with it.
Quite interesting. Very detailed, I'm saying. This has been quite eye-opening.
Yeah.
So thanks so much. मुझे तो पता ही नहीं था पराग पारिक. I'd heard of it, but I didn't realize that it's
Look, there is
important.
one thing. There's one interesting thing which recently there's a lady called Sucheta Dalal. You should maybe
Sucheta Dalal, okay,
you
right.
might have
Right. I
heard
heard of
if
The
you have seen
ET
that.
girl, no?
Yeah, that 92 scam. If you have seen that web series,
Ashrat
right?
Mehta.
Yeah. So the lady who sort of uncovered that lady is pretty active on YouTube. So
Okay.
the lady told me one very interesting thing. I was watching one of her videos. She told that what happens is that let's say you buy a phone from Apple, right? So Apple phone will be more or less good. It's a big company. You trust the brand. More or less, it will be good, right?
Right.
Or let's say you buy a Dove soap from Hindustan Liver, right?
Right.
But in the financial industry, it doesn't operate that way. So you might have a big brand. ICICI Bank is a big brand.
Right.
And Amitabh Bachchan gives ad for that. But
Right.
you can have a bad financial product, and more importantly, it might be a good financial product, but it might be bad for you.
Okay.
So even if they have a good product, in fact, Snigdha, that's why I was pointing out that relationship managers are one of the worst guys to do your financial planning because their vested interest is aligned against you, not for you. And I have seen some friends who have, I've seen, I do.
But see, again, for people like me, I'm not talking on behalf of anyone here. With due respect to all, I'm just saying people like me who may not have that much of knowledge.
Right.
It's all those that I depend or we depend on to, and we kind of get sold by that. So, whatever they say, अरे ये ले लो मैम ये हो जाएगा आपको कुछ करने की जरूरत नहीं है ये so for us it's like अच्छा यार 2-3 लाख डाल दिए उसके बाद then you are like
right.
Many people are saying many things now you're stuck with it so 3 साल तो वो निकाल ही नहीं सकते वैसे ही बैठे हुए हैं it's just like that those are the things which I said no थोड़ा बहुत knowledge अपना होना जरूरी है because blindly following these guys who are advising you but they are the people for us I think for people like us they are the ones who make money
right yeah
उनको पता है इनको तो कुछ पता ही नहीं है बुद्धू बना दो
So LIC agents, look, they are doing their job as well. Right. So LIC,
I know.
LIC agents and relationship managers is two category of people. Try to stay away from them. Okay.
What is your opinion on sorry, there's one question. There's this Edelweiss mutual fund, this thing. Any heard of them? What is the report or?
Yeah, they are good. In fact, it's run by Radhika Gupta, who I listen to quite a lot actually.
Okay.
Radhika
Okay,
Gupta.
so anything that let's say Edelweiss ka balanced fund so that is cropping up a bit. I mean, if you have ever paid attention to it or.
Yeah, I haven't personally invested in them, but I do listen to their investment head. There's a lady called Radhika Gupta who runs it. And she's a well-respected person in the industry. But again, in the mutual fund industry, always look at, these metrics, like type of things which ET Money will show you or a site like Value Research will show you. Those metrics are, and look, it's a very well-regulated industry. So it's not like buying a soap which is from this company versus that company. Nobody can run away with your money. There are enough structures around that. Okay, so some people get confused. Look, this is again so in India, SBI is the biggest fund house. Okay, just because of the brand name of SBI doesn't mean that SBI funds do well. Okay, and as like Snigdha was pointing out, what will happen is some relationship manager of SBI or some of these banks they have a good distribution network. They have too many branches, so they will end up being the biggest brand.
Right.
Yeah.
Right.
Got it.
Okay, Bilaji, one. So yeah, I come from a traditional middle class family which values gold. So I don't have a lot, but I do have some gold coins which are not of no use to me. So do you suggest I sell them and build a portfolio?
Yep. If you don't have emotional attachment to them, better to sell and make a portfolio. In fact, that is what I would recommend even if you own real estate. In fact, this is something I have to personally do and I haven't been able to do yet, but I want to do is that dispose real estate. And it's a simple question you have to ask yourself. Is your asset going to double in next 6-7 years or not? If it is not going to double, you might as well sell it off.
Okay, so good that she brought this up. So all these gold coins, even I don't know from how many very long years I've just kept them in the locker. So उसको लेके बेचो कैसे? I mean, you give it. You're talking about in lieu of it, they give you money. Like कैसे? How?
Yeah,
Or you're talking about physically selling it?
yeah, physically selling it. My assumption is that a lot of these jewelry companies probably should be able to buy it. That is the assumption. I've never tried it, but I'm guessing that
हाँ.
they should be able they will be ready to buy it. What price they give, I have no idea. I've never tried this.
Yeah, same here. I really
So
don't know how. I thought, okay, you're talking about in lieu something.
No, no,
no,
not at all.
I ended up buying gold coins from Baroda, Bank of Baroda. A few years back, they used to sell coins, and then I stopped when they started the bond. So
Right.
that was quite
Ah,
stupid.
I bought it in ICICI, and then they themselves didn't take it back. They said no, abhi Reserve Bank ne band kar diya. So I mean, I said I don't need it. Can you just take it back? They themselves have not taken it back. So that's the kind of thing sometimes we do and we get stuck with.
Yeah, I've never tried that, Snigdha. I'll have to check whether banks are coins might be easier to sell, I guess, because they're
Pata nahi, just find out and let me know.
Actually,
Because I'm
coins,
stuck.
ma'am, are easier to sell. I did a bit of research. I did talk to a couple of jewelers, so they will
Okay.
buy it without, charging us for wastage and all that nonsense. So they will buy it.
Okay.
I haven't really, I have
Yeah.
not tried selling it. I just inquired. So
I
Okay.
have a question.
Yeah.
BK bhai,
Yeah, bol.
have you heard of this investment firm called Marcellus? They
Oh, yeah,
have
yeah.
a
I follow that guy. Yeah. So
okay. So is it dependable? Because I don't know. Matlab, they have a good ticket size. The 50 lakhs is I
50
think.
lakh, 50 lakh is what their ticket size.
Ah,
Yeah. I
so
follow that guy. Yeah, I follow that guy. I listen to almost all his videos. Yeah, he's
okay.
one of the very good guys in the investment world.
But is it trustworthy? Would you like? I mean, of course. So yours is only an opinion. But क्या मतलब उसमें
They're a good
50 लाख
PMS.
डाल सकते हैं?
Yeah,
हाँ?
they're a good PMS. Yeah, they're a good PMS.
Okay.
They're one
So
of the
if you could just write down, we don't know. I don't know. I couldn't understand what you said. What is that you're
There's a company
recommending?
called Marcellus. which-
Marcellus.
Yeah.
Yeah.
So it makes
But
basically.
how is our asset protected in the case of Marcellus? Because they will be owning the mutual fund, right? Matlab, in the sense that they will be. Is the money safe in that kind of a situation? If tomorrow they.
No, I don't think they will. You will be holding it indirectly. They will be just impacting what to buy and sell. I don't think the
Okay.
holding will go to them.
All right. Okay.
So.
But you have heard of them. You're following that person.
Oh, yeah.
Marcellus.
This guy is actually a well-known guy. This Bong guy who was in UK and then he came back to India. He's a very well-known speaker in the investment world. And he has
Could you
written.
spell it out? Could you spell that out?
Marcellus.
Oh, Marcellus. Okay.
Yeah, Marcellus.
Marcellus.
Yeah, just Google, you will get this guy is pretty famous.
Yeah, this guy is.
Marcellus.
Yes.
LUS.
Yeah, and he has written actually very good books. There's a book called Consistent Compounder, Unusual Billionaires. So he has written 2-3 books which are very popular in the investment world. Because this guy operates on one thing interesting about this guy is a lot of the people analyze businesses sitting in air-conditioned rooms in Mumbai, right? This guy is a guy who will go to, like for example, Relaxo is one of his favorite stock. Relaxo chappal is something which doesn't strike you as
Right.
as a business you will invest in, right?
Totally. Yeah.
But Relaxo chappal is one of the best. They have wiped off all local brands.
Wow.
Oh.
It's a very big case study. Okay, how they have created a monopoly, and these are chappals which are less than 100 rupees.
Yeah, correct. I mean, that's what we look at things like these as tacky, right? And we go and run behind the brand.
Yeah. So when you are buying stocks, it's a very different deal.
Very different deal. Correct.
That's why I
As you were
recommend.
explaining. Yeah.
That's it's like will a idli shop do better or pizza shop do better? That's very different terms, right? Idli shop actually beat the pizza shop hell out of it, right?
Right. Correct.
So, but this guy is a good guy actually.
Okay. But can we aim like with this? But we'll have to do a lot of active investment to kind of match the returns with Marcellus, right? Matlab,
Yeah.
अगर हम marketplace में डाल देते हैं, so what are the pros and cons of, like, for instance, creating your own portfolio? Let's say you have 50 lakhs and you're creating your own portfolio versus putting it lock, stock and barrel with marketplace. What are the pros and cons? Any
Pros are that these guys are one of the good investment advisors.
Right.
I think one con is obviously their starting point is very high for a lot of people.
Right.
So that is one con which I can think of. Other thing is that obviously you are tied to that investment philosophy, whatever he has. His investment philosophy is primarily India will grow. I am investing in India. India will do great. So if that theory falls on its head,
Right.
then you will have a problem.
Whereas Parag Parekh has flexi, right? He has exposure to other
Yeah,
flexi
so
cap.
this guy, yeah, so look, PMS cannot invest in outside India. PMS companies are bound to India.
What CMS is it? What is it called?
PMS, Portfolio Management Services.
Oh, PMS. Okay, portfolio. Okay. Achha, that's a constraint by the. Okay, so they have to operate.
Yeah, so they might not be operate outside India. Mutual funds can operate outside India.
Okay, interesting. I didn't
But
know
these
that.
are one of the better guys. Marcellus, I've heard enough of these guys.
Okay.
18% CAGR.
What's that?
No, actually, my mom is also here. She's also quite interested. So she is saying that she knows the CAGR. She's saying 18% CAGR.
Oh, okay.
Marcellus, yeah. So which is of course a good amount.
Yeah, they have a consistent compounder portfolio. There's a rising giants. They have 3-4 portfolios. So they have a consistent compounder, and rising giants, and then I think there is one more they have. And their consistent compounders have done pretty well. Look, that has companies like Asian Paints, Pidilite. Fevicol is one of the biggest wealth maker in Indian industry. Asian Paints is one of the biggest wealth makers in Indian industry. Relaxo is a very interesting play. You understand, dig deep into Relaxo, you'll understand a lot of dynamics of rural India. Look, chappals which we take for granted in cities,
Wow.
is not, a 60
Yeah, I mean, this is
value.
So
really
maybe
how.
that shows rural small case might be a good bet also, right?
Correct. He's right. Yeah.
Yeah, so India is a transforming country, right? We have being a poor country is one of the biggest opportunity as well.
So right, you're here, so it's so interesting just to pick your brains. What are the horizons, like growing horizons? You already touched on electric vehicles. Right. Then we talked about rural. Right. And is there anything else that you're missing out on that you are, queued on to?
Right. So I think, look, there are different domains which I think banking is one thing I strongly believe in. Look, India is an underbanked country.
Okay.
Right? Banks right now, India's size and any economy, when it grows, banks have to grow. There's no option. Right? You can't grow as a country unless your banking grows. So banking is one, and when I say banking, I mean both types of banking, actual banks, also NBFCs like Bajaj, for example. So there are a lot of the industry itself has tons of different consumption is a big industry in India. So consumption, what happens is, means if you remember, I have stayed in very small towns in UP. The kid, we used to go to a shop and take, wheat and get wheat flour done, right? I'm sure some of us would have done in our childhood, right? Chakki atta, right? You would have. Right? Okay. So now the issue is, I'm sure none of us have done that in last 15-20 years.
Yeah.
In your grocery basket, branded products increase as you go up the economic line, right? Right. So who will benefit from that? There will be a Hindustan Liver which will benefit. There will be food brands and
Big Basket and Grofers and these kind of companies.
No, not these companies. I'm not very not these companies. I'm not very hopeful of, because these companies have no history of making money.
Okay.
Look, this is something which happens in a lot of industries. Is, let's say you have an industry which, so for example, let's say there is a pharma industry. Pharma industry basically uses some companies which are called as API companies, active pharma ingredients. Right. Now, what can happen is a pharma company might lose money, but the API companies might make money.
Right.
Okay, so Tata Motors might lose money, but a guy who makes brakes for Tata Motors might make money.
Right.
So
I got it. So you're saying in this case, consumption may better to go with the manufacturers like ITC and Unilever
yeah,
rather than the middlemen like Big Basket or
yeah.
what? Okay, okay.
So that happens in a lot of.
How about organic? Is organics and all this free range? Is that a good emerging market like carbon footprint, environment friendly?
So ESG investing. So there is a investing paradigm called ESG investing.
What is it called? EST. Okay.
ESG. So it is.
ESG.
Yeah.
Okay.
So it is. What does it stand for? S is sustainability.
Grow. Okay. Environment hoga.
Environment. Yeah.
Environmentally sustainable growth.
Yeah. No, it's not environment sustainable growth. It's something governance. G stands for governance. Okay. So ESG investing is that there are people who give sort of stamp to companies that these companies are ESG friendly. What it means is that they are not. So, for example, ITC is not a friendly company. It's a sin to smoke. It's a sin, right?
Right.
So this ESG investing is becoming so there are actually mutual funds which invest only in ESG companies.
Okay. I heard, yesterday bank to koi keh raha tha ESG. Okay, now I understand. Fine. So is that a good area? Are you bullish on that or?
Look, it's not about being bullish. It's if you believe in that ideology, it's like Islamic banking. Is it good or not? But if you believe in that religion, maybe you should follow it, right? Or you should follow it. So it's more related to that. I would say that if you want to judge it based on only business, then you probably don't want to apply those criteria.
Right.
Chalo, I think I will just take leave now, and it has been extremely insightful. Trust me, Birla, for people like me, तो मैं मतलब from the scratch probably बहुत लोगों ने बहुत कुछ समझाने की कोशिश की, इतने दिनों से कुछ समझ में नहीं आया, थोड़ा बहुत आज बहुत कुछ समझ में आया है. But I might trouble you and bother you shortly to थोड़ा अपना portfolio बनाते time, because you understand कि where I'm coming from. कुछ भी नहीं पता to कुछ पता है types,
Sure.
I might make 100 mistakes. I will definitely get in touch with you, and thank you so much. The rest of you have also, all the questions helped me, understand a little bit more, a tad bit more than where I was. Thank you for holding this session.
Thanks, everybody.
Because I have to, travel tomorrow back to Bangalore. Yeah, I'm in Kolkata, sitting in a bed. Spend some time.
Sure.
This was really nice. Thank you so much. Good night, everybody. Thank you.
Thank you so much.
I'm done. If anybody has any questions, I'm happy to answer. Otherwise, please feel free to connect.
Yeah.
All right.
Okay.
Thank you.
BK, are you going to share some collateral? Anything that you're sharing after this?
I'll share this presentation I'm recording, so
Awesome.
I'll put it on YouTube then.
Wonderful.
Okay.
Yeah.
Fantastic.
Thank you, Balaji. Thank you so much.
But the amazing session, the depth and the amount of time you spent. Thanks so much.
Thank you. Thanks a lot.
Yeah. Maza aa gaya. I mean, many things I learned today. So thanks.
Thank you, BK.
Thank you.
Thank you.
Bye. Take care.
Bye, everybody.
Good night.
Hi, this is Bharat.
Hey, Bharat.
Yeah, hi. How have you been?
Yeah, I'm doing good, Bharat.
So I just saw the post and then I joined. I forgot almost, and then I joined quite late. So you will be sharing this on your YouTube channel?
Yeah, I'll put it on YouTube and put it on Facebook. Okay. Thanks.
Who's that? He's asking. Who's that? Namrata. No, why would you tell him? How are you, Mamu?
I'm fine, beta.
Why do you have so much money behind you? Use a mattress. I know when people have a lot of money, they don't like using good mattresses, but mattresses, you sleep better. What a mess this would be to manage. How are you, Mamu?
All good, beta, all good.
You're recording this. Oh, this is his investment thing. Oh, okay. Sorry. I don't want to stop it. नहीं हो गया तुमको YouTube वाला सुना देंगे.
Okay. I'll then end this session.
बहुत अच्छा किया. Very nice.
Okay, thanks a lot. चलिए, bye.